What if I told you that some people are making more money trading digital guns in a video game than from their stock portfolios? It sounds like something out of a sci-fi movie, but it's happening right now. A once niche corner of the gaming world, the Counter-Strike 2 skin market has blown up into a multi-billion-dollar phenomenon, pulling in everyone from casual players to serious financial speculators. But that brings us to the billion-dollar question. Is this the future of digital finance? A new type of asset for a new generation? Or is it a massively overhyped bubble, fueled by hype and speculation, just waiting to pop and wipe out fortunes overnight? Today, we're breaking down exactly why the CS2 market is trending, dissecting the catastrophic crash that erased billions in a day, and revealing whether you should get in on the action or run for the hills. But to answer that question, you first have to understand the sheer scale of this new economy. Because we're not talking about a small hobby. We're talking about a multi-billion-dollar digital armory with its own rules, its own golds, and its own million-dollar assets. So what exactly is this CS2 investment market? If you're new to this, let's be clear. We are not talking about buying stock in Valve, the company. We are talking about buying the assets inside the game itself. It's an entire decentralized economy built on skins, cosmetic items that change the look of your weapons, your knife, or even your gloves. But here's the brutal truth that separates CS2 from every other game. These are not just pretty pixels. They are digital assets with real, liquid, real-world value. Unlike other games where an item is locked to your account forever, CS2 skins can be freely bought, sold, and traded on a massive global market. This one glitch, this ability to cash out, is what turns a simple cosmetic into a financial instrument. Their value is driven by the two oldest and most powerful economic principles on Earth: scarcity and demand. The scarcity is manufactured through a brilliant casino-like case unboxing system. You get a case in the game, pay for a key to open it, and you're pulling a digital slot machine. This gamble is what establishes the rarity. The items are broken into distinct tiers: common, mil-spec, blues; restricted, purples; classified, pinks; covert, reds; and finally, the extraordinary rare items, the golds. These are the legendary knives and gloves that have odds so astronomically low, you are literally more likely to be struck by lightning than to unbox a rare knife with a top-tier pattern. And that lottery-like scarcity is what fuels the demand. When you combine that scarcity with specific wear levels, from factory new down to battle-scarred, and random patterns, you get items so rare that only one may exist in the world. This is what creates million-dollar skins. We're talking about items like the case hardened blue gem karambit knife, or the Dragonlore sniper rifle, which have been valued and sold for prices that rival a house or a supercar. This isn't a kid's game. This is a buzzing, liquid economy that at its peak had a total market capitalization estimated to be nearly $6 billion. That's more than the entire GDP of some small countries. Think of it as collecting rare art, or high-end sneakers, or vintage trading cards, but on a global, 24/7, unregulated digital stock exchange. This ecosystem has been the dirty little secret of the gaming world for over a decade, but the launch of CS2 just changed everything. So, why now? What lit the fuse that turned this niche gamer hobby into a multi-billion-dollar investment trend that's now grabbing mainstream headlines? It wasn't just one thing. It was a perfect storm of four key drivers colliding at the exact same time. Fatal and most obviously was the launch of Counter-Strike 2 itself. This wasn't just a simple update. It was a complete engine overhaul, a massive graphical upgrade that changed everything. Skins that were already popular in the old game, the play skins that people use every day, suddenly look sharper, more vibrant, and hyper-realistic. The new lighting engine made metallic finishes glitter and complex patterns pop in a way they never had before. This visual glow-up was a massive catalyst. It reignited excitement across the entire community, bringing a tidal wave of new and returning players who wanted their gear to look as good as the new game. This created a colossal demand shock that sent prices for the most desirable skins to all-time highs, catching the eye of investors who saw a clear, upward trend. Second, the power of digital scarcity. This is the core economic glitch of the entire market. Unlike a lot of digital goods you can just copy and paste infinitely, most valuable CS2 items have a finite and often dwindling supply. Many of the most sought-after skins and stickers come from cases that no longer drop in the game. They are discontinued. This means the existing supply of these sealed cases, think of them as digital treasure chests, can only shrink over time. As players open these cases to gamble for the rare items inside, the case itself is destroyed, permanently removing it from the economy. This dwindling supply, net with the rising demand from the CS2 launch, is the classic, textbook recipe for asset appreciation. It's why holding on to these discontinued cases became one of the most popular and safe long-term investment strategies in the space. Third, you simply cannot ignore the power of influencer and flex culture. Top streamers and YouTubers, broadcasting to millions, are constantly showing off their insane inventories. They flex their collections, which are often worth tens or even hundreds of thousands of dollars live on stream. They open thousands of cases, creating viral, high-energy content around the thrill of hitting a rare gold item. This does two things. It creates a powerful, inescapable sense of FOMO, fear of missing out, and it cements these skins as the ultimate status symbol in the gaming world. When a major influencer shouts out a specific skin, case, or sticker, it can send their millions of followers rushing to buy it, causing massive, immediate price spikes and fueling the hype machine. And fourth, the broader cultural acceptance of digital assets. As a society, we've all just gotten a lot more comfortable with the idea of owning things that don't physically exist, whether that's a cryptocurrency, a domain name, or a digital cosmetic. But compared to the wild, unregulated, and often scam-filled Wild West of new crypto projects and NFTs, the CS2 skin market had a crucial advantage: a decade-long history. That 10-year track record gave it an appearance of stability, a blue-chip status in the digital world that was incredibly attractive to new investors looking for an alternative place to put their money. Disappointment of a visual upgrade, true digital scarcity, massive influencer hype, and a decade-long track record created what looked like an unstoppable, stable, new asset class. But this appearance of stability, this safe alternative to crypto, was exactly what made the coming crash so devastating. As investors were about to learn that this entire $6 billion economy was built on a foundation that could be shattered overnight by a single line of code. With all that incredible hype, with a 10-year track record and a $6 billion valuation, comes great risk. And on October 22, 2025, the entire CS2 market and everyone who believed in it learned this lesson in the most brutal and catastrophic way imaginable. If you want to truly understand CS2 investing, you must understand the crash. It was the dollar glitch moment that exposed the market's one fatal flaw. It all started with what looked like a routine update. The game's developer, Valve, pushed a new patch. Most players didn't even read the notes. But hidden inside that update, like a ticking time bomb, was a single line of code that would detonate the entire multi-billion-dollar economy. For the first time in the game's history, Valve introduced a new trade-up contract. Players could now take 5 covert or red tier skins and trade them up for a guaranteed extraordinary item, a knife or a pair of gloves. You have to understand what this did. Before this moment, those gold items were the holy grail. They were the only reason people opened cases. They were the lottery ticket. Their extreme rarity, based on insane luck, was the entire economic foundation for the case, the key, and the skin market. This one update shattered that foundation overnight. Suddenly, Anyone with enough money could manufacture the rarest items in the game. Rarity was no longer a function of luck. It was a function of cost. Spinach was instant and apocalyptic. The market didn't just dip, it imploded. The value of knives and gloves plummeted by as much as 70% in a matter of hours as the market was flooded with newly crafted golds. It was a full-blown panic. High-profile traders, influencers with six-figure inventories, and thousands of everyday players watched their digital portfolios evaporate in real time. The market's total value, which had peaked near $5.9 billion, was instantly gutted. The initial 24-hour drop was a staggering $1.7 billion. At its lowest point, the market had lost nearly $3 billion in total value, half its entire worth, gone. Community forums and Discord servers became a war zone of despair, anger, and screenshots of devastating losses. It was a stark, terrifying reminder of the core risk in this market. You do not truly own your assets. The entire economy exists at the mercy of Valve. They are the central bank, the government, and the digital god of this ecosystem. And a single, unilateral decision can wipe out billions in perceived value with no warning and zero protection for investors. This was the kill shot. This level of centralized betrayal, this $3 billion nuclear bomb, should have destroyed the market permanently. And yet, it didn't. Because what happened next, in the immediate aftermath of the crash, is the real reason this market is trending. And it's the single biggest argument for why this is more than just a bubble. This was the kill shot. This level of centralized betrayal, this $3 billion nuclear bomb, should have destroyed the market permanently. And yet, it didn't. What happened next is the real reason this market is trending, and why the story gets so much crazier. Just as quickly as it crashed, the market staged a miraculous recovery. Within a single night, it clawed back hundreds of millions in value. Within 24 hours, nearly $1 billion had flooded back into the market as opportunistic, diamond-handed investors and new money whales bought the dip with a vengeance. This insane whiplash, this catastrophic crash followed by a violent V-shaped recovery, perfectly captures the entire debate at the heart of CS2 investing. Is this a massively overhyped bubble, or is it the brave new world of digital finance? The bubble argument is strong, and you have to respect it. This is a completely unregulated market. There is no FDIC insurance, no investor protection, and no one to call if your assets get slashed by 70% overnight. The October crash proved without a shadow of a doubt that you do not own your assets. You are merely a tenant in Valve's digital kingdom. They hold all the cards, and they can change the rules at any time, breaking the fundamental trust that scarcity will be protected. The value is purely speculative, based entirely on community hype and the continued popularity of a single video game, imprisonment. The future of digital finance case is just as compelling. You cannot ignore the fact that CS2 skins are one of the oldest and most established digital assets on the planet, with a proven track record of over a decade. The player base is massive, global, and fiercely loyal, ensuring a constant baseline source of demand. And most importantly, the market survived its 2008-style financial crisis. It proved its resilience. In the wake of the crash, the market is even showing signs of maturing. Investors are shifting away from pure degenerate hype and are now adopting more disciplined, real-world strategies like dollar-cost averaging, investing a fixed amount over time to ride out the volatility. Plus, professional-grade tools like Price Empire are now available, giving serious investors data-driven analytics and portfolio tracking that was previously impossible. So, after all that, what's the final call? Should you be putting your hard-earned money into digital weapon skins? First, and this is the most important thing I will say in this entire video, this is not financial advice. The CS2 market is highly speculative, and you should only ever invest money you are fully 100% prepared to lose. With that out of the way, here's a practical way to think about it. If you're a curious beginner, the smartest way in is to start small. Don't try to time the market or hunt for the next $1 million knife. Instead, you could consider a strategy like dollar cost averaging into a high-volume, discontinued case. This gives you exposure to the market's long-term growth based on the dwindling supply principle, while minimizing the risk of buying at a single, FOMO-driven peak. For more serious investors, the key is diversification and information. Spread your capital across different item types: discontinued cases, rare stickers, high-tier play skins, to spread out your risk. Don't go all in on one trend. Use portfolio tracking tools to monitor your investments and stay relentlessly plugged into community news and game updates, since a single patch note can signal the next major market shift. The golden rule is the same for everyone. This is a high-risk, high-reward game. Never, ever invest more than you can comfortably afford to watch disappear. So, you now have the full picture. You know why it's trending, the devastation of the crash, and the plan for how to approach it. This brings us to the final, critical conclusion. What is the one force that will decide the entire future of this multi-billion-dollar economy? The answer will determine everything. And it's not what you think. So, you now have the full picture. You know why CS2 investments are trending. It's not just hype. It's the perfect, undeniable storm of a massive, globally anticipated game relaunch. The powerful, real-world economics of true digital scarcity and a deep, generational cultural shift towards valuing digital assets. This is not a maybe. This is a market that has undeniably made some people millionaires, and it has now proven its shocking resilience. It just survived a $3 billion crash, a Lehman Brothers moment that would have vaporized any other speculative market. The fact that it didn't just die, but instead saw $1 billion flood back in within 24 hours is perhaps the most bullish signal you could ever ask for. It proves this is more than a fad. It's a real, battle-hardened economy with deep-pocketed, opportunistic investors. But that October 2025 crash is a permanent, deep, bloody scar. It is the critical, brutal truth lesson that you must accept. This is a volatile, lawless, completely unregulated, digital Wild West, where fortunes are made and entire multi-thousand-dollar portfolios can be evaporated in the blink of an eye by a single line of code. It is both a fascinating new digital economy and a speculative, centralized bubble, all at the exact same time. The final verdict? The dollar glitch at the center of this entire world is that the future of this multi-billion-dollar ecosystem, whether it goes to zero or becomes the foundation for a new world of digital finance, will be decided by one single force. It's not the community, it's not the investors, and it's not the hype. The entire future of this market will be decided by Valve. They are the all-powerful, unelected, unaccountable central bank of this entire world. The October 22nd patch note was not a bug fix. It was their version of an unannounced 70% interest rate hike. They just proved they are not afraid to use that power, and that is the central, unmanageable risk and the dollar glitch in this system. Now I want to hear from you. This is where the real alpha is, in the community. What's your take on this? Are we in a massive, centralized bubble? Or is this just the beginning for digital asset investing? Let me know your biggest wins, your worst losses, and your predictions for this market in the comments below. And finally, if you got any value out of this breakdown, if you're serious about navigating this new, chaotic market, you must be subscribed to this channel and you must click that bell. Because in my next video, we're doing a full, data-driven deep dive into the top 5 discontinued cases I believe have the most potential for the year ahead. You will not want to miss it.